YouTubers, Mike Martin's here, Mike Martin's channel. Guys, sorry about can't read market talk from this morning. It was a good show. We had a good rolling. A lot of audio issues, but I think I got it fixed. I think I have it ready for Mike in the Night this Saturday. So hopefully back on Monday for can't read morning market talk and get guests on. Should be okay. Anyways, somebody has sent me a message saying, Mike, what's going on with the Treasury bonds? What's going on? Well, we were talking about it earlier on the show this morning. With Treasury bonds going up. So here it is. 10-year yield surges the most in a week since 2016 as investors reassess recession concerns. So I think it's just because of trade talk, positiveness in trade talks, or looking forward to a brighter trading future with China, I guess, and could be propping this. It could be a lot of things. So let's say what they say here. September 13, 2019. So there's the U.S. Treasury yields. I saw this morning. I was in shock when I saw this morning. It was going in negative, and then now, boom, it's back. It's almost like it got a full resuscitation. Right? We were headed towards negative rates a few weeks back. The yield on the benchmark 10-year Treasury note was poised for its largest weekly rally since November 2016, as investors checked prior concerns that the U.S. was careering toward economic downturn. Yeah, of course. The yield on the benchmark 10-year Treasury note was higher to 1.84, while the yield on the 30-day Treasury bond was also higher at 2.31%. On Friday. The moves in the week's final day of trading bring the 10-year yield's week-to-date climb over 30 basis points, its largest such move since November 2016. The 30-year bond yield is up nearly 32 basis points for the week, also its largest increase since autumn 2016. Bond yields rise as prices fall. So this is huge, guys. I saw this and I was like, I didn't know what the heck was going on. I woke up in the morning, it's a morning market talk, let's get this rolling. I'm going through, the Dow is here, the NASDAQ is here, the TSX is here. Gold is down. Then you keep going, and then the 10-year bond is, going through the roof. I was absolutely floored when I saw that. Then I called the Raven on the show, and people couldn't hear him with the audio, so... Anyways, I'm waiting for this commercial to kind of go through here. I don't know why there's a long commercial here. So here it is, guys. This is important, guys. Pay attention to this, okay?
Welcome back to the Halftime Report. I'm Seema Modi, and this is Futures Now. The 10-year yield is on fire this week as equities rally in hopes of a trade war resolution rise. Brian Stutt.
Aha! I knew it was a trade war resolution, or I didn't say resolution, but talks of a positive trade war.
And Jim Urio on the floor of the CME. And Brian, how much trust can we really put into this week's...
Yeah, how much trust, guys?
I think we can put a lot of trust in it because...
Really? Are you sure?
When you look at interest rates here, they have nasty-wise, on a percent change basis, rallied hard. Now, 195 in the 10-year was sort of a support level. It broke there. It seems like we want to retest that on the 10-year. Then maybe we get, go back down towards that 150 mark. But I think if you're a bond investor here and you're not dumping your treasuries, I think it's crazy because to me, it seems like we don't see below 150 for a very long time unless trade talks really break down completely and it totally reverses itself and we have massive tariffs with China. I think the rally in interest rates is on here and it's going to be here to stay.
10-year yield at 1.89%, Jim. Is there a path above 2% on the 10-year?
Okay.
I think the months of June and July, pretty much that whole time, it zigzagged right around just north of 2%. I think it's heading back to that area, so I think it'll go into the 2% area. Whether or not it breaks through that on the upside, probably things have to change. Perhaps the trade war has to actually be solved, but I think it's heading back.
Wow, this is huge. Traders said that the reassessment of August angst over the direction of the American economy and calmer trade rhetoric between the U.S. and China helped spur the week's market selling. Last month, inverted yield curve, new tariffs between U.S. and China, and grim diagnosis for the GDP growth combined to fuel a pivot into safer assets like U.S. debt. Guys, I don't think... Wow. So, what do you guys think? Please comment below on this. This is, really? Are they misguiding people on purpose? Guys, they're looking at slashing rates even further when it comes to the overnight lending and Bank of America. I mean, and the Feds. I mean, they're looking at lowering rates. This is horrible. I get it. It makes sense what they're saying. It makes total sense, but come on, guys. Can't people see through this? The amount of money printing, the amount of they want to basically get metals back down. They want to get metals back under control. That's why this morning's show before it got deleted was called Metals Crashing. Well, metals are going down, people, and like I said, I don't believe, because the job numbers, we are in the weakest production quarter since the Great Depression. Our productivity, like producing, manufacturing, it's been the lowest since the Great Depression. Lowest quarter. Job numbers are high on one end, but when you look at the payroll, it doesn't add up. It's absolutely a gong show. I can't believe that. Guys, this is just me. This is my opinion. You know what I'm saying? While the whole world is gripped with debt and negative interest rates, and the whole world is struggling paying down their own sovereign debt, their own countries can't even manage their own sovereign debt, not even the U.S., and then tariffs, and then yeah, I'm not, like, bonds sitting at 1.4, 1.3 like they were, or where they should be, that's realistically where they should be sitting at. There's no way we could see a 2% Treasury bond at, I don't see it. You know what I'm saying? The financial markets are just taking a huge battering, and all over the world. Anyways. Let me know, is this a tactic to manipulate or bring down the metals and bring them under control? I know this sounds weird and kind of far-fetched. That's what I'm thinking, guys. And look at the housing market. I didn't even mention that. The housing market's out of control. They have to raise the $500,000 first buyer loan of 10% to $800,000 for first-time buyers to get into the markets. What the heck is going on? Anyways, guys, comment below. I look really forward to listen to your analysis on what you think is going on. Thanks for watching, guys, and we'll talk soon.